intro slides, right?
Yeah.
Okay, we are live. Thank you for joining us this afternoon for a wonderful presentation by the Lewis and Clark Low Income Taxpayer Clinic interns Aiden Hall, Anthony Scoma, and Nicholas Wesley. Take it away, gentlemen.
All right. Hello, everyone. The presentation that we have for you today, we've titled the 1099 Toolkit. This will be all about providing some useful information for those of you who are interested in working as an independent contractor or maybe just a little bit unsure about what kind of classification you have and giving some tips to help you with taxes in that area. So we have three main areas of our presentation. Firstly, we're just going to be going over a pretty broad overview of what even is a 1099 contractor. So for this, we're just going to discuss the maybe sometimes kind of ambiguous tests that are used to distinguish someone who's an employee from someone who is a contractor. From there, we're going to talk about some of the more nitty-gritty tax implications of what specifically you need to do if you are a contractor, so how your taxes are different from someone who's working just a normal W-2 or employee style job. And then lastly, we're going to discuss some of the options that you might have if you're in trouble with the IRS and your tax debt. Maybe you improperly filed previously, or you weren't totally sure what your obligations were, and now you're in a tough spot. And we have a couple solutions that are available to a lot of taxpayers to work out of that. So with that being said, let's begin on our first section. So again, what is a 1099 contractor? Before we move into this, I should just note that 1099 contractors can be found across the economy, right? I think that the last metric I looked at said that roughly 9% of all people participating in the U.S. economy as of 2023 were classified as an independent contractor. So this is a very diverse field, right? Like this could include people who are working on those stereotypical contractor jobs, like as an Uber driver or a DoorDash driver or in construction, but it could also be anything else, such as a photographer, a personal trainer, or a painter. It really is important to keep in mind that what a contractor is not so much determined by the specific field you're working in, but how that work that you do is completed and your relation to anyone else who you're working alongside or you're working on behalf of. So the broad test that the IRS follows is, I'm just going to adjust this, is asking whether, in determining whether the person providing service is an employee or an independent contractor, all information that provides evidence of the degree of control and independence must be considered. So it's a very, very broad inquiry, right? We're not going to just stop at one fact or one detail and say, that's it. We don't need to go any further. There are a lot of people out there who might say, well, I know I'm an independent contractor because when I started working, I signed a form that says I agree to be an independent contractor. So surely that's all you need, right? And it's very, very much not the case. The inquiry is very broad. It can include a lot of different information, right? Because as the IRS says, there is no magic or set number of factors that make the worker an employee or an independent contractor. And no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. So again, this is something where in trying to decide if someone's an employee or an independent contractor, we want to be willing to consider just about anything that we have available to us to answer that question. And so that first set of factors that we look at are what the IRS considers the behavior control factors. So this is just generally answering the question of, does the company or the boss or the payer for the service control or have the right to control what the worker does and how the worker does the job? So we might think that in a very classic example of a W-2 or employee style job, this is very straightforward, right? If you've worked a job at McDonald's, if you've worked a job at Home Depot, you're probably going to have a boss that can tell you what to do, when to do it, and how to do it, and you have to then do that. And that's just what your job is. But when we're talking about an independent contractor, it's obviously not going to be the case there. So there's a number of factors that we use to make that distinction. So firstly, we're going to talk about an hour requirement, right? Does the payor, does the boss require that the worker show up on certain times, on certain days to work for a certain amount of time? Or do they just say, hey, here's this thing I need you to do by this date, however long it takes you to do that, or whatever days you work, it's totally up to you. So those are going to be our two sides there. Maybe we also might talk about mandatory meetings, right? Does the payer, does the boss require that the worker show up to a certain place to have a talk with everyone who's working under that person, or are they told that, I'll reach out to you when I specifically need something from you, and outside of that, we pretty much don't need to have any connection. Another factor we look at is whether there's any training, right? Does the worker come into this job already well skilled in that profession, right? Do they start their painting work already with years of experience as a painter and already being very qualified? Or do they show up to work not really knowing how the job gets done and then getting trained while they're there by the employer to learn how to do that? And then lastly, just our general question of does the employer decide how the job gets done, right? I don't know too much about like painting, for example, but let's say, for example, that the employer says that I require you to use this brush instead of this brush to get this job done. That would be an example of an employer deciding that a job should be done a certain way. If the employer or if the payer says, do get this job done however you like, I don't care what brush you use, just make sure it gets painted, then that would be more an independent contractor because that person is given the discretion to decide using their expertise how the job should be done versus someone just being told, do it exactly as I tell you and don't think beyond that. So those are the behavior control factors. Financial control is another area. So in this, we're generally asking, does the business direct or control the financial and business aspects of the worker's job? So this is everything having to do with money, whether it be the money that's paid to the worker for the work that they do, or the money that's used to facilitate the work as it's getting done. So our one really general inquiry is we ask, is the worker being paid by the hour or even by the day, or are they being paid by the job that they do? Right? Are you getting paid, an hourly wage to work for a set amount of time, or are you getting paid for every job or every task that you complete? For every painting job that you do you get paid X amount of money? For maybe if you work in an agricultural field, are you getting paid based on how many units you're able to produce? Right, so that's one inquiry. We also might ask if the boss reimburses the worker for any expenses they incur, or if the worker is then required to handle that cost. So is the boss saying, hey, if you have to pay for parking at a job, give me that receipt, I'll pay you back for it? Or are they saying, hey, if you had to pay for parking, that's your business. You've got to figure that out. That's one of those balancing tests. Then lastly, we'd ask if the boss is providing the tools or vehicles that are needed to accomplish the job, or if the worker is required to provide those. Again, if a worker is required to provide all their own tools and their own vehicle, that's something that we typically say is more of an independent contractor because it's them deciding what to get done and them applying their own expertise and their own possessions to get a job done, or are they exclusively working within the world of the employer and using everything that they give them. Our last set of factors then is just called relationship of the parties. This is maybe one of the murkier sides of this test because it is, on one hand, it can be very specific, but it also can be very confusing in terms of how to decide how something lands. So this is generally asking the question of, does the worker have any documents outlining a traditional employee relationship, or are things left unclarified? And I have documents here because that makes it most straightforward, but this is just generally getting at the idea of, does the worker and does the payer or the boss, well, what is their understanding of how that work relationship is? Do they think that it's an employee relationship, or do they think that it's an independent contractor relationship? So this gets back to that point earlier that I talked about of having a contract that says you are an independent contractor. That certainly would be a factor that would lean in favor of saying that someone actually is an independent contractor. But again, it's just part of one small portion of the inquiry. So again, like I said, what does your contract say? Does it say you're an independent contractor? Does it say you're an employee? That will weigh in either direction. Another one that's maybe a little bit less obvious is, does the boss or does the payer give the worker any benefits like healthcare, sick days, or vacation days? If they don't, that's something that we typically associate with an independent contractor. And if they do, that's more of an employee. Then we also ask, is the work that the worker does with the boss indefinite? So going on however long they choose to keep it going, or is it only supposed to last for as long as a specified number of tasks or even a single task? If an employer or a boss is saying, hey, I'm going to pay you this amount of money to do this one thing, that's typically more an independent contractor. But if they're saying, here, let's start working together and I'll pay you this amount per month, and there's no definite end date for that work, that's more of an employee. And then lastly, the work that the worker is doing, is that a critical part of the business, or is it not really related to that? So, and there can definitely be some debate on this, but one of the classic examples that people use for this sort of thing is stuff like janitorial services for any sort of business that has a physical office, right? So a business that has an office Maybe their business is finance, or maybe their business is sales. They might try to argue that that is their core business. So any work that's done to, say, sweep the floors or clean the bathrooms, that's not as critical to that part because the real focus is on the thing that really makes them money. So they might argue then that that means that someone doing those janitorial services is a more independent contractor. But again, even in that example, one could argue that in a workplace that requires people to be there in person, it's absolutely critical that there's a clean environment to do that. And if that wasn't the case, then there wouldn't be any ability to do those core parts of the business. So again, that should just illustrate that this inquiry and a lot of these can go either direction. And it's just more about how the argument is made. So on that note, I have a couple examples for everyone. So firstly, we have our first example here, and we're just going to be asking whether this person is an employee or an independent contractor. I wrote this example without specifically thinking that it was going to land one direction or another. So I do think you can argue that it's one or the other, but I think as we'll see that it probably leans more in one direction. So our facts are that Charlie works at a bar that's owned by Mac and Dennis. And when Charlie started, he did not sign any employment agreement or any other paperwork, but Dennis told him, "We're willing to keep you on, but only as an independent contractor." And Charlie agreed to this. So right here, that gets to our third set of factors that we just discussed. Charlie has said that he is an independent contractor. That's what Dennis asked of him. And so we can absolutely say that the parties understood that this was work as an independent contractor. So again, that's one factor that we put in our independent contractor bucket. Next fact is that Charlie does not get any health benefits, but is given one vacation day and one sick day each year. So again, this could maybe cut both ways a bit. He's not getting any health benefits, which does make us think more independent contractor. But even though he's given very few vacation and sick days, he is given some vacation and sick days, which does sort of suggest that the employer or that the boss, Mac and Dennis, are putting some kind of requirements on how this work is getting done and what sort of time they expect him to commit to it. We also know that Dennis designed Charlie a bartender uniform, which he must be wearing during his shifts, which are Monday through Saturday from 3 p.m. to 12 a.m. This is very straightforwardly a factor that makes us think he's more an employee. He's required to wear this uniform. It's a uniform that was not provided by him. It was provided by his boss. And he has to show up at a specific time on specific days to do this work. All these factors are things that make us think he's more an employee. Then next we say that Charlie is allowed to serve any drinks that he likes and can design the menu however he pleases using alcohol supplied to him by Mac and Dennis. He does not get paid an hourly rate, but earns, there's this thing on the screen that stops me from being able to see that, but I think it says he earns 15 cents per drink that he serves. So this is another fact that sort of cuts both ways, right? He's allowed to serve any drinks that he likes and can design the menu, which means that he is ultimately given that discretion to decide how the job of bartending gets done. That makes us think more an independent contractor. Furthermore, he doesn't get paid an hourly rate, but gets paid per drink that he serves, which is, again, another factor that makes us think more independent contractor. But on the other hand, he's exclusively using supplies provided to him by Mac and Dennis, which again is just a classic factor that we use to say that someone is an employee, not an independent contractor. So this fact overall could cut both ways. And then lastly, we say Charlie never served drinks before this job and was taught everything he knows by Mac over the course of his first day. So again, right there, this is not someone who is highly skilled at an individual job, showing up to perform that individual job for someone who needs a specific task done. This is someone who came to this place not really knowing how to do any of this stuff and is just becoming part of the business and being trained in every aspect of it from their first day on. So we can take all these facts together, and again, I would say that you could make some kind of an argument in either direction, but I'd say that we'd probably more say employee on this one. Specifically, we'd be pointing to that schedule he has. It's Monday through Saturday, 3 p.m. to 12 a.m. It's a very long schedule. That's a very rigid requirement of hours he has to work. And then we'd also say that he is given that vacation time and sick days, and he's also given a uniform that he has to wear. All these factors show that there's a pretty strong degree of control being exercised over how this work is done, even if there are some other factors that make you think more that he's just working as a contractor for Mac and Dennis. And our last example is, again, employer independent contractor. Christopher has been working for Tony for more than 10 years. So already that factor there, this is a long-term employment relationship. So that's something that we typically think of more as an employee as opposed to a contractor. He's been working there for a long amount of time. We also know that Christopher never signed any kind of paperwork and gets no sick time or vacation time. However, if he requires any kind of extensive medical care, Tony has promised him that, as your boss, I will take care of it. So again, those factors show that he's not getting sick time or vacation time, which makes us think more independent contractor. But we can interpret that there is a promise of health insurance or health coverage in this sort of informal employment arrangement. Again, it's all about making the argument. You could say that maybe this isn't specifically health benefits as we typically imagine employees get, but I think definitely a good argument can be made that this is health care that's being provided by someone who is acting as his employer and doing it. Next fact is he does not have a set schedule and can work whenever he likes. Tony normally gives him a list of tasks to do each week, which Christopher can decide how to get done. So again, that's just very straightforward independent contractor. He doesn't work a set schedule. He gets to decide when the work gets done. He typically gets to decide how it gets done. He just has discrete tasks that he needs to do. So all of that typically makes us think more independent contractor. But again, let's keep in mind he's been doing this for 10 years. So even if someone is doing on a given day things that make them look more like an independent contractor, if that relationship has been existing like that for such a long amount of time and has grown to have such really rigid expectations of how it overall works, then maybe that makes us think more employee. Christopher also gets paid by the task and needs to supply his own tools for any given job. Again, very straightforward independent contractor fact. He is not getting paid an overall rate and he has to provide all of his own equipment. This is akin to maybe an Uber driver and a Lyft driver whose main piece of equipment that they have to use is the car that they transport passengers in, and then any other equipment that they have in that vehicle. They provide it all themselves. That typically makes us think more independent contractor, just like here. And then we know that Christopher is free to use these tools for any other purpose and regularly earns money on the side through work unconnected to Tony. We know that Tony has no problem with this, but does require that Christopher notify him of any such side work. So again, if he has these tools that he's allowed to use however he pleases to accomplish whatever other tasks he wants to accomplish, that's something that we typically think of as more an independent contractor. This is someone who is not being given tools by a boss to do a specific job, and then they go back to the boss. They go to the person who then gets to use them however they like. But again, maybe that second sentence cuts against that, where even though he is being permitted to use these tools however he likes, his boss is still requiring him that he keep him up to date on how he does it, which might make us think more that these are tools in some way being loaned to him by the boss, or at least being that he's permitted to have based on what the boss allows. We also know that Christopher must be ready 24/7 for a call from Tony, which might lead to him being required to perform a specific task in a specific way at a specific time. Again, this is very strongly looking like an employee relationship, right? Even if their overall relationship is one where he gets to perform tasks however he likes at whatever time he wants, sometimes that goes out the window and he has to follow his orders very directly, to the letter. What the boss is asking for, he has to do. So again, maybe if his overall relationship looks more independent contractor, but he has these brief spurts of needing to work like an employee, that'd be something that we could say makes him more of an employee. And lastly, we have Christopher learned the skills he uses in this job before working for Tony, and though he does not have any formal training, it can be fairly said that few people have this particular set of skills. So again, this is more independent contractor facts, right? If he was already skilled in this line of work before he began to work for Tony, and this is a line of work that typically most people can't really do, that makes us think that he's more of a professional who is just performing tasks for Tony on an independent contractor basis, as opposed to just being a general employee. So if we add up all these factors together, I again think that you could make some kind of an argument for an employee, but I think there's a much stronger case here that Christopher, if we add up everything together, is more of an independent contractor. And even if the facts aren't going to be quite as straightforward as some of the ones we've had in these two examples, this same inquiry can be done with anyone in any job. You can always add up how your job gets done and ask all the details of how that work is done and compare them, just like we've done them here. I would recommend that anyone who's interested in trying to determine for themselves maybe how they work or which of these categories they fall into, you could just try it yourself at home. You could write down the details of how you do your work, and you could perform this exact same inquiry just like we did, using the same factors that we've discussed. So on that note, I'll pass it to my colleague here for the next section.
So once you understand whether you or not you're an employee or an independent contractor, you have to face the tax man. And so I'll be walking through the tax implications of being an independent contractor and what kind of forms you should be familiar with and what to expect out of this determination. So who must report? So there's two levels to this. There is the payer, who we would think of as the employer, and they need to submit a 1099 NEC. So they need to report this when a business is making a payment to somebody who is not their direct employee. So they need to be making this for a payment through the course of trade or business, and it can be made to anybody, an individual, partnership, estate, etc. And they need to make a report on this if they make at least $600 a year. They're paying that out to the payee. So if you just look at the form we have on screen, it's very simple. It's just the name and street address of the payer, their identification number, your identification number as the independent contractor, and just some of the information that gives the IRS the understanding of who the players in this economic relationship are. So from your end, as an independent contractor, the payee, you need to submit a W-9 to that payer. This is the person who has contracted with you for your services. So this is, the person who is required to file an information return. So you would submit a W-9. This is in contrast to a W-4, which would be for an employee. So on this one, it's again another simple form. You just need to fill out your basic information, and this connects the payment from your payer to your account through the IRS. So this is really just to get all your ducks in a row and set up the relationship moving forward. So who must file? Just as a point of reference, a W-2 employee can make up to almost $14,000 a year without having to file. And I've broken it down into months, and this is of course gross income, so this is before taxes or other deductions. And what we're looking here on the graph is a 2023. It'll be slightly higher for 2024, but this is in contrast to a 1099 who, if you make at least $400 as an independent contractor, you need to file. So in all likelihood, you are going to be filing a return if you are an independent contractor. And even if you make less than $400, if for whatever reason you are required to, it's probably just a good idea. So this is a W-2. As you can see, this has in the top right-hand corner the tax withholdings. That's federal, Social Security, Medicare. These all get taken out of your paycheck as a matter of course as an employee. So you would almost not be aware that it's happening until the end of the year when you get a tax return on the income that has been withheld. In contrast, we have here a 1099, and as you can see, there's only one area where there's a withholding, and that's a backup withholding. And in all likelihood, you will have no federal taxes withheld. That's only in special circumstances where either you don't have a taxpayer identification number or for some other reason your taxes are being withheld. But that is not the norm, and you should not expect it. So what are you actually going to be paying? So at this point, Social Security is about 12.4% of your tax, self-employment tax rate, and 2.9 goes to Medicare. So a total of 15.3% in just self-employment taxes that you are responsible for. So there's a silver lining to this. Anything you pay in taxes, half of what you pay will be deducted from your income. It's not a whole lot, but it is something. So how does this affect you? So again, I cannot emphasize this enough. Taxes are not being withheld. You will not get a return at the end of the year, and you need to pay your taxes to be in accordance with the IRS. So there are separate forms that you'll also likely need to fill out as part of your tax return. That's the Schedule C, profit or loss for a business, and Schedule SE, self-employment tax. I'll take you through those, but this is what a 1040 will look like for a 1099 independent contractor. So a Schedule C is just a profit or loss for the business. The sections are income, expenses, cost of goods, vehicle information, and other expenses. So this is really a catch-all for really the business of your independent contractorship. So you'll be putting everything down here. This will kind of be a base understanding of what is being earned and lost just through the business. And just as a point of reference, the expenses here, we'll get into this a little bit later, but these are the kind of things that they expect you to be expenses incurred over the course of your independent contractorship. So moving on to the self-employment tax, this is the unfortunate form that takes away your hard-earned money. So this will be on the net earnings of your self-employment, and you're going to have to, as we've said, $400 or more. You're going to have to submit this, and you have to pay these no matter how old you are, and even if you're getting Social Security or Medicare benefits. So this is pretty much applicable to everybody, and is a fairly understandable form. You really need to just understand that at the end of the day, you are going to be paying about 15% of your income through this form. So how you go about submitting your taxes is a little bit more complicated than a W-2 employee. Quarterly estimates are somewhat the norm for a 1099 worker. We'll have details on who needs to submit these, but they are a way of anticipating and getting ahead of your tax burden at the end of the year. Instead of one lump sum at the end, you pay in quarterly increments, and this allows for you to track your expenses and losses more up to date, and again, doesn't force you to be saving all year in order to pay off your tax burden at the end of it. And just going forward, those deadlines are April 15th, June 15th, September 15th, and January 15th. These are quarterly estimates of the year. So why do we do quarterly estimates? So since the Tax Cuts and Jobs Act enacted in December 2017, there were substantial changes to the tax code and how people pay their taxes. So, and some people, and this could be you, earn income very unevenly throughout the year. Agricultural workers are a good example of somebody where it's either you're making a lot of money at some periods in the year and then maybe none at all at others. So under this method, you can take that unequal tax burden and kind of pay as you go, as the sign says. And these quarterly estimates are usually based off of the previous years. So keeping track and knowing if there has been a great change in your income will impact whether you want to take more out or if you just want to stick with what has worked in the past. And if you do just recreate last year's, do expect that there might be an overpayment and you'll get a small refund at the end of the year, or you'll owe a small balance at the end of the year for what was unpaid. And so who needs to do quarterly estimates? So sole proprietorships, partnerships, individuals, S corporations, and of course, 1099 independent contractors. And so if you're expecting to pay at least $1,000, you should likely be doing quarterly estimates. And if you owe taxes in the previous year, all of these become kind of part and parcel of being an independent contractor. And other things that would require estimated taxes on quarterly payments are just, these are all kind of pointing at 1099 workers, is self-employed, does not have taxes withheld, but maybe not enough, and yeah, is not an employer, and doesn't have an employer withholding taxes. So again, it's 1099, that's who they really expect to be doing these quarterly estimates. So business expense deductions, section 162 of the Internal Revenue Code covers this. And what you can deduct, going back to that Schedule C uh, uh, form that I showed you earlier, this is what you can count as an expense for your business. And the rule is that it has to be ordinary and necessary for your business. And those have very specific meanings within this context. Ordinary is common for the industry, and similar businesses would normally incur this debt. So if you're in the business of food preparation and you start doing tax advice or buy a bunch of software, that is likely not ordinary in the sense of your business. And then necessary goes to it is appropriate and the business owner couldn't manage without it. So it has to be really go at the heart of what the business is about. It can't just be something that you want that you write off as being a business expense. So important to this is keeping track of these expenses. And here's just a list, as we saw on the Schedule C earlier: advertising costs, insurance, vehicle-related expenses. We'll cover that in depth in a second. But legal expenses, home office expenses, rent and lease payments. And again, all of these have to be ordinary and necessary according to the IRS. And while this is not an endorsement, there are free software that is available to people that are very useful in keeping track of these expenses. Wave has a free starter pack software bundle that you can get, and it'll allow you to track your receipts, do some accounting, invoicing, and connect your bank account. I personally am an independent contractor, have been for years now, and I've recently started using Zoho, and that generates invoices for me. I have not used tracking payments or interface with customers because that's not really relevant to my job, but all really useful for a variety of businesses and definitely something you should look into if you're thinking about diving into the world of 1099 taxes. So finally, can you deduct your car costs? This is the most likely thing, especially if you are like an Uber driver, you're gonna see as expenses to your business. So can you deduct them? Maybe. If the car is entirely for business purposes, you can deduct any related expense. That's repairs, mileage, the whole bit. But if you have a mix of business and personal use of the car, then only the business uses are deductible, and you need to take careful notation of when it is a business expense and when it is personal. So tracking that and keeping them separate is a bit of a task. Keep car-related receipts, always a good idea, and track any and all mileage you drive in the course of your business. Best practice, you should date it. You should write down the destination and where you're driving from and the estimated mileage. This will hold up if you are ever questioned or audited about this, and the IRS will be able to look that you've taken detailed notes, and your mileage will be verified in that way. But so as I close out my segment, just a reminder that you should do your taxes if you are an independent contractor. Probably good advice for everybody, but specifically for 1099 employees. Thank you.
All right, thank you, Anthony. Now it's all well and good to know what the difference between an employee and an independent contractor is and what your tax responsibilities are. But it is now, as we sit here today, getting towards the end of November, almost the end of the year, and it will be tax time before you know it. And you may be sitting there thinking that you have not really been doing any of this for the year and wondering what you can do now that you know that taxes are going to be due. So we're going to go through a few of those options for you. But the first thing that you should really look at doing is challenging your classification, or at least taking another look. Now, as my colleague Aiden mentioned, there are those three factors that the IRS will look at And you can do that by yourself as well, to think about whether you're a an employee or a 1099 contractor. If you think that you're an employee, you can simply ask your boss or whoever's in charge of that, your HR department, to reclassify you. Um, but keep in mind that if your employer does not reclassify you and they don't have a reasonable basis for doing so, they can be held liable for that half portion of the employment, self-employment taxes that we mentioned. So employers are required to report this classification correctly. Now, if you want a declaration from the IRS, for them to tell you which of these you are, you would want to file the SS8. That will go through the factors that we've already mentioned about behavioral financial control. And again, this is a way for you to get a straight answer from the IRS about whether you are an employee or a 1099 contractor. Now, what happens if you don't necessarily want to challenge your classification, but you haven't been paying those taxes because you're a 1099 employee and you just weren't aware that nothing was being withheld? At the clinic here, we see a lot of clients, and the three most common solutions that we offer them in this situation is a payment plan, offer in compromise, or currently not collectible. So we'll go over those briefly now. First, a payment plan is fairly popular. That allows you to break up your tax debt into monthly payments, usually 72 months. The big benefit here is that the IRS will not garnish wages. It won't attempt to go after that debt once you're in a payment plan. However, penalties and interest do continue to accrue while you're making those payments. There is often a fee for setting up these payment plans. However, that can be waived if you are a low income individual. Next is the offer in compromise, and this essentially allows you to pay less than the debt that you owe to the IRS. So on its face, it's a very, very popular option for a lot of people. However, there are a few caveats. First, you have to be in tax filing compliance. So if you're a 1099 employee, that does mean making your quarterly estimates going forward. And while it does allow you to pay less than what you owe the IRS, that calculation is not based on what you think that you can offer them, but based on your financial circumstances. So there are calculations that look at your assets, your income, and your expenses, and it will spit out a number that the IRS thinks that you can pay them. And if your financial situation is such that that offer isn't less than what you owe, this option might not be that favorable for you. In this option, you can also pay upfront once you get that offer, or in a series of payments. And as I mentioned, the key hurdle here is qualifying for an offer that is lower than what you actually owe. That process of getting to the offer requires you to go through bank statements and pay stubs to substantiate what you make, what your assets are, and what your expenses are. So this can be a little tricky for some clients. Another potential solution is called currently not collectible. And as the name suggests, it means that the IRS will put a hold on collection activities on your account while you are in a difficult financial situation. Now, this is a temporary solution, and it does not get rid of any of the debt that you owe, but it can be very beneficial for clients who are in an extremely difficult financial position. They don't feel that they can make monthly payments to the IRS, and for whatever reason, the offering compromise isn't favorable. Maybe they have too many assets or something to that effect. The great thing about currently not collectible is that it's fairly easy to get into. You can call the IRS at their toll-free number, and that is generally more straightforward than an offering compromise, for example. Again, currently not collectible is beneficial because it prevents the IRS from collecting, from garnishing wages. But like your payment plan, it doesn't really put a toll on the statute of limitations for collection. So in that way, again, it's a temporary solution. It doesn't make the debt go away. Now, to summarize some of the things we've talked about in this presentation, my colleague Aidan talked about the classification of employees and 1099 contractors. The IRS looks at three factors: behavioral, financial, and the type of relationship. If you think that your employer has classified you incorrectly, or if you just want the IRS to tell you which one of these you are, because it can be a confusing determination, you can file Form SS8 by providing information about your circumstances. As far as tax responsibilities, we know that you should file taxes if you're a 1099 employee and you make $400 or more. That's a very low threshold, so I think that applies to most people. If you're a 1099 contractor, as my colleague Anthony said, you should just file your taxes. The taxes that you owe are 15.3%. That's self-employment only. However, half is available as a deduction from income. And if you are a 1099 employee, you should know at this point that it's likely no taxes are being withheld on your pay stubs. And that means that for you, instead of paying at the end of the year in one lump sum or having them taken out on a W-2, you should probably be making quarterly estimates. And those are due in April, June, September, and January. One of the benefits of being a 1099 contractor is that you can deduct personal expenses on the Schedule C. The keywords are ordinary and necessary. So bring receipts if that's what you're going to be doing with your taxes. Schedule C is one of the most commonly audited schedules by the IRS. As far as tax relief, again, if you get to the end of the year and tax season and realize that you suddenly have all of these taxes due, you have at least three options. Payment plan doesn't reduce your debt, but the IRS won't garnish wages. You can make payments over 72 months, and fee waivers are available for low-income clients. For the offering compromise, you pay less than what you owe, and this fully settles your debt with the IRS. But it's not a given that you will be able to pay that lower amount. That's a calculation that's based on your individual financial circumstances. And again, you must be in filing compliance in order to get that relief from the IRS. Finally, currently not collectible, it's a temporary solution. It doesn't stop interest or penalties from accruing, but it's very easy to get into. You can call the IRS over the phone. It's very attractive for clients who are in a tough financial spot and don't feel that they can make those monthly payments, and again, are not really eligible for the offering compromise. Now we want to provide you some resources that you can go to if you have questions. I know this is a very complicated subject. We are one of those resources, the Lewis and Clark Low Income Taxpayer Clinic. We offer services for low-income individuals who have a controversy with the IRS. That means we typically don't prepare your 1040s or renew ITINs unless they are related to the tax issue that you're having. But if you are a 1099 employee and, for example, you think that you're misclassified, that is something that this clinic would help with. We also have the IRS Taxpayer Advocate Service for free assistance with federal tax problems, similar to the LITC. And Cash Oregon is where you can get free tax preparation and ITIN renewals. So I hope that was helpful information for you all. On behalf of my colleagues, thank you for joining us. Uh,
That was wonderful. Thank you so much for this important information. We did have a lively chat, and I did want to go over some of the points that were made in the chat just to put them in the video as well. So the first question is, to determine if you're an independent contractor or an employee, do you need to convince your employer or the IRS that you are been misclassified? And I did put a response in here. I said ultimately you'd like both to agree, but that you can do your taxes correctly by just convincing the IRS that you're an employee. And that ultimately to have proper withholding, you'd also have to get reclassified with your employer. I don't know if you want to add anything to that. If not, I
yeah,
can go
I
on.
think that's right. I mean, ultimately, you do want both to agree. Just keep in mind that your employer is kind of in charge of the withholding. So it would be great if you could get them on the same page as far as your classification. So you have you have an expected tax situation throughout the entire year. But ultimately, the IRS is the one collecting and like levying taxes. So they
Yep,
also have to agree with you on your classification.
yep. And then the next question was, how does being paid as a contractor affect my taxes and legal status as an immigrant? I wrote that being paid as a contractor should not have anything to do with your legal status as an immigrant. And I left it at that. I don't know if you all have anything else to add to that.
I might add, and you can clarify this if you know more than me, but I also believe that just the act of filing taxes is seen very favorably for immigrants seeking permanent status. So if you are an immigrant and you're getting a 1099, we do recommend that you file because the government looks upon that very favorably if you think that you are eventually going to be applying for citizenship. They like to see people paying taxes. Yeah.
Right, there's a number of immigration related um, procedures that look at good moral character, and one of those factors is, yes, filing and paying taxes on time. So that's actually an excellent point, Nicholas. Um, but in terms of like, are you treated differently because of immigration status? I would say no, that the tax burden is almost exactly the same, maybe slightly different if you have children with, you know, social security numbers or no social security numbers. But in terms of just straight up employment taxes, it'll be the same. And then let's see. Another question is, what punishments can my boss get for paying me like a contractor instead of an employee? We did talk about, well, not in this presentation, but in class, we talked about the private right of action against an employer for committing fraud. In other words, if you can prove that there's fraud, you can sue your employer for $5,000 plus attorney fees and costs. And so there's that, but then there's also potentially IRS imposed penalties by the IRS for flagrant violations of the law. Would you all like to further comment?
It, no, I think that covers it. Yeah, just realize that if you are an employee, that your employer is responsible for that portion of self-employment taxes. So if they're treating you like a 1099 employee just so they don't have to pay those self-employment taxes, that's a good indication that it's not a legitimate reason or like a fraudulent reason.
Yeah. And then the next question is self-employment the same as being an independent contractor? And my response was, yes, it is. Being self-employed is the same thing as being an independent contractor. And then, do you have to pay quarterly or can you just do it at the end of the year? I wrote down I copied and pasted the rule, which says that the IRS will not charge any penalties if you pay at least 90% of the tax you owe for the current year, or 100% of the tax you owe for the previous year, or you owe less than $1,000 in tax after subtracting withholdings and credits. So that is a safe harbor provision, but in general, we have a pay-as-you-go system, as Anthony was talking about, and that you should pay quarterly taxes to prevent any possibility of having penalties charged against you.
Yeah, I would recommend if your main source of income is as an independent contractor, quarterly estimates are probably the way you want to go with it.
So there's another question. Can you go into I think it was called quarterly holdings or estimates of paying taxes yearly as a 1099? So I did not see this question until just now. So quarterly taxes, I think there's an easy way to calculate how much you would pay. Is that something that we talked about in the slides at all?
Um,
Or
I touched on it briefly. Usually the standard is to do what you paid last year in quarterly increments. But if you're keeping track of that and you want to hit a very specific amount of withholdings or amount of taxes each quarter, then you can. But it really is just a way to keep abreast of your income throughout the year. Because apparently a lot of people have been, since the proliferation of independent contractors, we've been having a lot more people underpaying their taxes, and the quarterly estimates were a solution to that problem.
yeah. And the rule of thumb is if you can calculate your net profit, so you take your gross income minus any expenses, and then you have your net profit, and you take 20% of that, you should use that in case, for example, if this is the first year you're ever an independent contractor, or you're sure that the last year's taxes don't quite calculate to what you'll owe this year, then that's another way of doing it, is just 20% of your net profit. Okay, well, that was wonderful. Thank you for the lively chat and discussion. And this video will be available for the future on our website. And so feel free to review it at your leisure in the future. Oh, wait, there's a new comment. Oh, thank you. Thank you, Christina. Okay. Bye, everyone. Thank
Thank
you.
you.